Up here. Number 4 of these 7 stocks up here that I'm buying September 2023 is Cheesecake Factory. So cake is a ticker symbol on this one. Cake, a crazy past 5 years, okay? And I did a whole kind of case study recently on Cheesecake Factory over 5-year spans, and you're going to find that Cheesecake Factory is one of the most cyclical stocks in the world in terms of it has these horrible 5-year periods followed by an amazing 5-year period, followed by a horrible 5-year period, followed by an amazing 5-year period. It's incredible, okay? But nonetheless, the last 5 years have been bad for Cheesecake stock price. Hasn't been bad for necessarily the business outside of 2020 when the shutdowns and everything were going on, but their stock price has been in a bad place for the past 5 years. Now, when you think about Cheesecake Factory, remember they own their restaurant, right? The Cheesecake Factory, the big dog, right? That they're always building more locations around, and obviously try to go to those places on a Friday, Saturday night and try to get a seat. Good luck without waiting for an hour or two, okay? Now, they also own this concept, which I think has incredible potential. North Italia. I mean, these locations, if you think Cheesecake Factory is packed, North Italia is even more packed from what I've always gone to. I mean, some of these North Italia are so busy you can't even get into them. I mean, I called one night when I was in Arizona. This is probably, 2 months ago now at this point in time. They couldn't even get me in that night. I was like, there's no time slot open the entire night? Nope. Couldn't even get in. If you want to go to the one in Summerlin, I mean, usually you're looking at a huge wait time on almost every single night, but certainly on the weekends. So North Italia has a great chance of success as far as being a massive, let's call it, restaurant chain around the United States of America. Then they also own Fox Restaurant Concepts, which they own a bunch of different interesting concepts. If you're ever in Arizona, you can try out a lot of these concepts that they own. They own a lot of them. I've been to many of them, and they're all really, really good, and they're very well run, okay? They got that DNA, but it's really about testing to see, what's the next North Italia? What's the next Cheesecake Factory, right? What's that next huge potential concept here? Now, in terms of the numbers, right? Company trades in terms of 2024 numbers at a forward P of less than 10. Yeah, I'll take that. I'll take that. For Cheesecake Factory, I'll gladly take that. Obviously not the most exciting revenue growth story. 5 to 7% is what's expected over the next few years on average per year by analysts. That's fine with me. At a forward P of under 10 on this one. And the fact that think about what these restaurant chains had to go through. I mean, they had to go through all their restaurants being shut down back in 2020, which was crazy to think about. Whoever can see, you always think about recessions and, maybe we're not as busy. You always think about that. You never think about, our restaurant's going to be closed, forced to be closed, and then when we open back up, we're going to be forced to have 50% capacity. You never even conceive of that, and that's what happened, right? That's literally the worst case scenario. And then they went through the second worst case scenario after that, which was super high inflation, where all the stuff that goes into making all the products, all the food inflation went crazy in 2022, right? And, some of that has subsided recently, which is good. Wage inflation all hit while you had very low unemployment, which obviously isn't the best thing in the world when you're in the restaurant industry. All those things kind of coming together, that's how the stock has had such a tough 5 years. And I think a lot of that stuff is going away now at this point in time, so it should have a much better next 5 years than it has over the last 5 years. Now, in terms of dividend, while I wait for the stock to do its thing, I get to make a nice 3% dividend yield on this one. Now, payout ratio says 53%, but keep in mind the company's expected, let's call it $3 of EPS next year, somewhere around there roughly. Well, if the payout's a little over $1, I mean, then we're at a 34% payout ratio, 35% payout ratio or something like that based upon next year's numbers. So, yeah, really like this one overall. And another one of those stocks that doesn't matter what happens. I feel comfortable. Good economy, I can feel fine buying Cheesecake Factory. Bad economy, same thing. It doesn't matter. This is one of those that I'll buy the dip regardless, okay?
Downgraded today. Every time I look at this company, the inroads they're making in AI, but then I looked at the number of customers that they have. Last quarter, it went up to 161 only. I mean, it seems like this data analytics moving into AI makes sense across the board, but this stock getting pounded today and downgraded.
Yeah, it is. Look at the downgrade today. Citibank basically downgraded to underweight from equal weight, and they've got now basically a price target at $9. And I think the reason being is if you think about artificial intelligence, predictive analytics, data intelligence, if you will, that's essentially the roots of Palantir. And the roots also I really found it in the military. The Department of Defense was a major customer, which actually helped the foundations of Palantir. But the challenges for Palantir is breaching the private sector. They have been moving more so into the private sector realm of the equation. But the challenge also from that standpoint is think about the competition now when it comes down to commercial and enterprise level based customers. Now, if you look at the report last quarter, which was published on the 7th of August, sales only grew about 13%. The total customer count on the commercial side, which is the private sector outside of course, the Department of Defense business they have, grew about 30%. So one would say perhaps that despite the number of customer count increase for Palantir, they may have had to make some concessions to keep existing customers in the private sector on board.
Whoa. Hold your horses. Hold your horses for just a moment. What are we talking about here? Okay. So, first off, very important. In regards to Palantir, right? If they're adding a bunch of new customers, that could also be from the perspective of like free trials, or let's call it like paid trials, but without signing the big contract yet, right? Getting people to test out the product. We know a ton of people are interested in Palantir, right? And so, not everybody wants to sign a $100 million deal tomorrow, right? Not everybody wants to sign a $50 million deal, a $200 million deal right away. And so Palantir is a little more white glove service. Here's what we have to offer. Can go ahead and experience that. And then if you like it, we can see the revenue recognition down the road, right? And as we've heard from almost all these companies, including Snowflake, right? 2024 is when you're going to start to see revenue recognized for a lot of these companies on the software side, right? 2024. So everybody just got way too excited thinking, oh, we're going to see all these software revenues in 2023. It's just not happening. Like, you don't even have the hardware really set up yet. Why do you think NVIDIA is selling all these chips, right? Like, you got to put all these pieces together. And so this is just a classic story of like everybody got so excited thinking all the revenue's coming right now. And it's like the revenue's coming, but it's coming next year in regards to this, right? So yeah, to just assume like, oh, they must be taking hits from their other customers or something like that. No, okay.
Their software. So I think this is an interesting situation where we're seeing a divergence of the better playing, if you will, valuation AI-based stocks. I'm going to put NVIDIA out there. Maybe Aristonet is another one that's actually hitting new 52-week highs versus Palantir. Because if you look at the projections last year, they were expecting 30% compound annual growth rates in sales by 2025 or through 2025. Obviously, they missed that last quarter. If you look at the earnings profile for Palantir, they're expecting about 23 cents a share. That's on an adjusted basis for this year. But 2024 is not very meaningful at 26 cents. That's about 12% growth. But the kicker is it's trading around 73 times forward earnings. And so that's about 5 times EBITDA. It's expensive. And I think that's one of the reasons why Citi is downgrading the stock. And I also think one of the other reasons why is there's a lot of competition now at the private sector level. And that's what I think is challenging Palantir.
George, I'm going to read you a quote from the Citigroup note on Palantir.
And by the way, sure, if you only expect Palantir to grow 13%, like they grew last quarter in the future, sure, the stock is very expensive. But I just think there's a lot of folks that are convinced it's going to be a 20 to 30% type grower and growing the bottom line at way over a 20 to 30% clip. If you add that on for a stock in this industry with a sticky business model, that doesn't seem expensive at all. That's where you get into this divergence between kind of the bulls and the bears and the believers and the not believers in regards to Palantir.
Morgan Stanley,
sorry.
Morgan Stanley
yes,
downgraded.
I thought it was. And it's going to be nightmare fuel for people that are long AI stocks. And that is this: looking for a tangible revenue contribution from generative AI, and the fact that Palantir had the lack of a monetization strategy. So therefore, George, these people, there's so much excitement about AI, but these people got to find out how to make money from it. And when they do, there's going to be winners, George, and there's going to be losers.
Yeah, there's going to be a lot of ways to make money from this. And, I'll take you back to a great example. Okay, a great example. I remember when Meta went public. Back then it was Facebook. Okay, I remember when they went public, and there was a lot of debate about, like, how are they going to make money from that? Like, I don't understand. Sure, they got all these people interested in it and using it, but how are they going to make money? Like, that was a real question. I kid you not. That was the main question when Facebook went public. How are they going to make money from it? Like people were so confused about like how they could make money, and nowadays we're just like, are you kidding me? Like that was a serious question. I kind of look at this. I'm like, you think if they have all these folks interested, they're not going to be able to make money from this? Are we serious about this? Like, what are we talking about here? Okay, of course they're going to be able to make a lot of money from this, right? So that's Wall Street being Wall Street. Holy smokes!
Absolutely, I think we're seeing that divergence happening. I mean, it comes down to tangible income, and I think that's where you're going to start to see the divergence away from the competition. In other words, there's a lot of competition out there for the private sector AI. I mean, just think about Google and Microsoft altogether are very competitive in this space. Salesforce also is very competitive in the artificial intelligence area from an ERP or enterprise resource planning software standpoint, or even CRM or customer relations management software standpoint. That's really where Palantir's growth estimates came from. It was the private sector. Now their core business, their core government business, their public sector business is still robust. That's helping keep their business operating. But I think you're just going to see now a valuation divergence. Very expensive AI stocks that have no tangible, haven't proven themselves from a tangible standpoint to make profits from it yet. I think Palantir fits in that same space, along with C3 AI, by the way, which is symbol AI, versus companies that are tangibly making profits from AI, and that's again some of the hardware companies.
What are we talking about? No one's making profits from an AI except one company in the world. Do you know what the one company in the world that's making profits from AI right now? One company. NVIDIA. Okay, NVIDIA. No one else is making profits from AI right now. Snowflake's not. Microsoft's not making profits from AI right now. They might be making some revenue, but they are not making profits. Amazon's not making profits from AI. AMD's not making profits from AI. Snowflake's not making profits from AI. No one's making profits from AI right now other than NVIDIA. Okay, that's it. They're the infrastructure going in, right? AMD will obviously kick in likely in 24 as another huge infrastructure play in regards to the chip side of things, right? On the hardware side. And then we'll start to see the software kick in a major way in 2024 for a lot of these companies. But let's be clear about this. Don't just act like, Palantir, they're the only ones not making money. No one's making profits from AI outside of NVIDIA right now. Let's be very crystal clear about that.
Aristnet and, of course, NVIDIA.
Yeah, I think some of the inline results have said you got to be patient on a stock like this moving forward as they continue to monetize. All right, thanks to George Tillis joining us, breaking down Palantir.
Yeah, patience is definitely key any times with any growth stock. I mean, growth rates move around, and they move around substantially, and I've never seen it with a company where that hasn't happened. I mean, every growth company I could ever think of has their growth rates move around all the time, including Apple did over time, including Microsoft certainly has had that. Amazon has gone through that. Tesla's gone through that. There's not one growth stock I can ever think of where it was just clear up and up, and it was the same growth rate all the time. These growth rates move around substantially, folks.